Well, this market certainly continues to surprise us. Every time, we think that how much more run up can we see, it just keeps going up. And there are certainly sectors that are attractive, even in this market, as we're seeing this kind of rotation to quality, we see a certain amount of profit taking. There are certain sectors that we like and the other ones that we're a little bit cautionary about. Like example being we are underweight consumer discretionary. Specifically, when it comes to goods, we see the demand going down as prices are going up. But at the same time, we really like the services because there's so much pent-up demand for experiences that people are still having, and we still see the higher demand in that space. We also can't ignore the fact that S&P 500 is up by over 20% this year, and investors are seeing it and getting a little bit concerned. So what we're advocating to do is taking profits in the indexes like S&P 500, like Russell 2000, and rotating to quality, going into the very careful security selection and into specific sectors that are well positioned to deal with this higher volatility, which is what we're expecting for the remainder of this year.
Are there certain companies out there? You mentioned some of the sectors and market cap areas. Are there specific companies or industries that are more attractive than others? Are semiconductors and cloud computing places that you would go in technology? Is it other names in financials? Is it regional banks or insurers? What exactly do you put the money into?
Dom, it's a great question. There are certainly the technology is positioned very well in a specific sector, semiconductors, that just like you mentioned. But our absolute favorites in this space are healthcare and financials. In healthcare, look, Delta variant is very much out there. It's a concern. There is a lot of pent-up demand in healthcare services. We see pharmaceutical companies. We see, just all healthcare as a general sector extremely well positioned in this environment. Same thing can be said for banking and financials in general. Historically, this is the sector that is positively correlated to the rising interest rate environment. And Federal Reserve, as a general expectation, is probably going to start tapering, as soon as this fall, maybe in the winter. And investors are expecting, market is expecting that the rates are going to be going up, and profit margins for financials are going to be much wider than what we've been seeing before. So rotating to quality and looking at individual equities from the perspective of valuations, how are they positioned in the marketplace? What are the future earnings potential for the companies? This is what we need to see. We need to take a really close look at our investment portfolios, both in equities and in bonds, because getting through this higher interest rate environment is going to be quite a challenge, and we need to be prepared, and we need to do some healthy profit taking in certain sectors and rotate to quality and making sure that we're positioned to get through this challenging times that, in our opinion, are on the horizon.
Just a few moments left here, Katerina. Do we fear the Fed and tapering?
We absolutely do. We are expecting it. They are going with the narrative that the inflation is transitory, and very much rightfully so. They're trying to get the economy through the recovery, and they're doing a really good job at it. But tapering is on the horizon. We think it's only the matter of time, and we believe that market is expecting it. So what we tell the client is focus less on the short term and more on the long term strategic positioning of their portfolios.